I got a question from the audience. Mike to go was asking, probably directed at Andrew, how is, I'm assuming it's the Intelligent Portfolio, the Union platform, how is that different from social trading, or what are the nuances there?
Well, okay, so the starting point for social trading is ranked lists. So a ranked list is a place that you go and you can scroll through the best performing strategies over, some metric. So whether it's a week, a month, 5 weeks, whatever it is. Whereas our platform is built around non-disintermediated distribution. So what would happen is that you would come to Scandinavian Capital Markets, you would sign up as a manager, we would build a strategy, which is effectively your strategy. And on top of that, we would build what we call a microfund for distribution. And that microfund itself is branded, it matches your identity. And so you can take that unique microfund built on the strategy of a single manager, and you can pass it into your audience without ever having to worry that you're going to compete for capital from the ranked list. So no one would ever see your microfund fact sheet unless you'd shared it with them. So there is no place where you can go and find the best performing strategies, because what happens then is, as we know, money moves from place to place very quickly. You'll stay in a place for a short period of time until it fails to meet your expectation, and you'll naturally assume that the thing that performed best over the last month is the place that your money should be. And in fact, there was a paper written in 1981 by some dude called Myopic Loss Aversion and the Equity Risk Premium Puzzle, which you should definitely have a read of. And it basically describes that, the idea that psychologically, people are far more likely to move from a small underperforming investment to a small underperforming investment, the extent to which they destroy capital on a far grander scale than if they just stick it out, small incremental success over time. And so that's basically what we're trying to do. A social trading would allow you to take the trades of someone else. We're trying to build an alternative investment product for the discretionary edge of every long run investor on earth. Mike to go, thank you.
Mike, thank you, Mike to go. And please throw your questions at us. I've seen way too many investors just hop in, hop out, and trying to chase the hottest thing. And the flavor of the month it was last month's flavor. If you're hopping in after you see that something, it's normally you need to let a trade theory or a thesis kind of develop over a couple of months. And if you're just when you see it happen, the results over that 1 month, it's probably taken a few months for that trade to play out. Otherwise, you get stuck going to a strategy that's over trading and got lucky 1 month and might be unlucky the next month.
Exactly. On top of that, you consider the idea that every person connected to trading and from the world of trading has slightly irrational expectation of return, and so part of the job that we're trying to fulfill is a slightly better organization of that irrational expectation. So the idea that you can have a product offered across multiple risks, and you can participate in that product, that strategy, that microfund, within the bands of your risk expectation, within that kind of risk premium. The idea that long run equities has done 10%, and so how much excess return would you want for the excess risk? And so that's kind of the space that we play in. Definitely retail, but more pushing that retail sales objective into the longer run investors. Yes, Michael, sorry.
Well, I was going to say you explained a little bit from the trader side. What about from the investor side of things?
Well, so the investor gets their own fact sheet, and I think that's basically what a microfund is. So if you imagine what a fund is, where a bunch of people put their money into a pot and you get a fact sheet at the end of the month, a microfund is the description of a single investor's capital. So it's a perfectly described, live, liquid and transparent reflection of your investment. Whether you've put in 50 grand or 5 grand, whether you've put in 100 grand and taken out 6, it perfectly describes exactly where you stand in real time in terms of your investment. And every investor gets their own microfund, and so it's a perfect reflection of their and it's also perfectly segregated. And I think that that's a very important piece. It's perfectly segregated the extent to which your money is not in a pot or a pool with anybody else's money. A decision made by a trader is passed perfectly per unit of risk and per unit of capital into your account. The trades are papered on your account, and so your investment is, is a perfectly ring-fenced example of Stephen's strategy.
Yes, and Andrew, this is why our approach dovetails with Andrew's technology. It's the transparency, and from the perspective of the viewers today, including kind of individual or retail investors. It's about transparency and resulting security. So this is what I mean when we say our approach dovetails with Andrew's technology. A CTA offers managed accounts. So that means individual investors open up their own accounts, they put their money in their accounts, and they keep their accounts and their funds. We can't touch those funds. We can trade those funds via technology like Andrew's on the backbone of like MT4. But that and coming from a fintech, ad tech background in consumer finance and a focus on compliance and consumer protection finance, I think that's a world of difference than going on some mobile trading platform and getting trading signals from whoever, who knows who. There's just that much more transparency and control over your funds.
And we're talking about money, right? Like money is, it's sacrosanct to people, how much they have and how they grow it and where they put it. And so you've got to be very, very careful of that. This is a serious business. And so we take it very seriously, and much like you do.
Yeah, I had a buddy this week. He's like, hey, Michael, he's like, I invested in this FX thing. I was like, why didn't you come talk to me before you do anything like that? He's like, yeah, I spoke to someone and they told me I could make, 6 to 20% a month. And I'm like, okay, send me everything you know. And like, I'm like, how did you send the money? He's like, well, I sent, they made me transfer money to Bitcoin and then send Bitcoin to this address. I'm like, did you send it to a brokerage? He's like, no, I just sent it to this wallet address. I'm like, show me your brokerage account. He's like, no, I don't have a brokerage account. I just have access to a back-end platform that tells me how much percentage I made every day. I was like,
genius.
I was like, no.
But maybe he'll make 6% this month or 20.
I know. When the time comes to withdraw, that's when he'll find out what really happens. I was like no, but